Is the housing market going to crash? It's one of the more discussed topics of 2020 and will continue to be through likely 2021. And I've been on both sides of the fence in recent months, ultimately concluding probably not. But when I saw this recent video by Kristina Smallhorn warning signs the housing market in 2021 is in big trouble, I was like, oh crap, what did I miss?
The shit's gonna hit the fan.
Well, I'll tell you what she said, and I'll give you my thoughts. But first, click the subscribe button and ring the notification bell because I post important stuff like this each and every week, and you don't want to miss it. Let's go. Hi, I'm Matt Theriault, CEO of Epic Real Estate, where I show people how to invest in real estate, deploying more mind than money using creative financing strategies, with an emphasis on retiring early. And staying on top of the housing market is really important for my line of work. If you would have asked me back in March of 2020, I would have bet my bottom dollar, and thank God I didn't, that the market would have totally tanked by right now. But as they say, hindsight is 2020, and that hindsight has revealed some foresight. And I've come to the conclusion that the housing market will not crash in 2021. And I have 7 very solid reasons as to why it won't. I shared those recently in great detail, so I don't want to recreate that here right now, but I made it very easy for you to watch right here. And if that didn't pop up for you just now, I also put a link to it below in the comments. Now, just after I released that video, I stumbled upon this one. Warning Signs, the Housing Market in 2021 is in Big Trouble by Kristina Smallhorn. I put a link to it in the description below also in case you want to watch it later. She's got a great channel too, so check it out when you get a chance. And share the love and hit the subscribe button when you get there. And speaking of sharing the love, do me a favor and smash the like button right here, right now. And we'll go ahead and we'll get into what Kristina said. Tell me what you think.
So are we heading for a housing crash or a housing boom? Well, you let me know what you think after you've heard the information that I'm about to give you today. Most of these economists haven't even mentioned it. Everybody knows there was a mortgage forbearance that was allowed for many people in 2020. And many people have taken that forbearance, but what they didn't tell you is they still have escrows they have to pay. That includes your property taxes. My friend Jeremy Knight explains what's happening in Texas.
When people went on forbearance, it put off their payments, but most homeowners escrow their taxes. And our property taxes in Texas are the highest, one of the highest in the nation, as far as percent-wise, because we don't have an income tax. So if you're a homeowner in Texas and you went on forbearance and you haven't paid a mortgage payment for 6 months, a lot of homeowners, 30%-ish of homeowners were having a hard time making their payments, right? Just making their payments. So if you were making partial payments or weren't paying all of your property taxes, what's going to happen is those property taxes are still due. So around February, you're going to start seeing tax liens of 7% because it's 6% and they add another tack on another one. And then you're going to see a 2% increase after that all the way till July. And what happens in July? July turns around and you'll see a 20% increase because they hire an attorney. The city will hire an attorney against you because you haven't paid your taxes. And if you haven't pulled out a plan and started putting a plan in place to make those delayed tax payments, we're going to have a lot of homeowners have massive tax liens.
Okay, a lot of forbearance talk and property taxes. So let's take a look. We'll do it one at a time. She said that forbearance requests are up to their highest level since August. And I wasn't sure if that were true or not, so I looked it up myself at the Mortgage Bankers Association website. Now, the headline reads that the number of loans in forbearance are up 5.54%. That's factual. But what's actual is this number has been on a steady decline since June. And even with this small uptick, it's still much lower than the peak back in June. And when you look at this chart, there are 2 stories that you can tell. The first is what most people see. OMG, look at all of those delinquent mortgages, and they wouldn't be wrong. It's a lot. But here's an alternative story. The US went into quarantine in March, and the government granted a mortgage forbearance to homeowners, and a lot of them took the government up on that offer. In June, when many states began to reopen their economies, a bunch of those people opted out of the forbearance program and resumed their payments. Over the summer, as more states loosened lockdown guidelines and unemployment was quickly recovering, even more homeowners began making their payments again. Come October, when the initial forbearance expired, and although everyone had the option to opt back in for another 6 months, many opted not to. And as we moved through the fall, unemployment continued to decline, albeit at a slower pace, and even more homeowners resumed making their payments. Then came a second wave of the virus just before Thanksgiving. States began to batten down the hatches again, so to speak, and 5.54% of those recovering mortgage payments went delinquent again. What I see is the forbearance chart is moving in almost perfect unison with quarantine lockdowns and unemployment. When we get control of the virus, and we will, and the economy opens with people going back to work, because they will, you're going to see these delinquency numbers fall significantly. There will still be plenty left over for sure, but it's not going to look anything like it looks right now. And there's another consideration that will help these delinquent mortgages that are left over. And I'll tell you what it is in just a second. But let's address the second thing Kristina mentioned, the property tax escrows that are stacking up. Kristina is right. I haven't heard anyone else discuss this. And it shouldn't be ignored, particularly in Texas. I looked it up. And that guy was right. Delinquent property taxes can accumulate quickly in Texas, really quickly, but not enough to spell big trouble for the housing market in 2021. And here's why. We're in the midst of not just a national crisis, but a global crisis. And as long as we're dealing with it and it's impacting the economy, I see the mortgage forbearance and the eviction moratorium can being continuously kicked down the road until we can at least see some resemblance of light at the end of this tunnel. Varying stimulus and new government programs can be expected from the new administration through 2021. And not just because that's typical of the party, and not just because it's the right thing to do from a humanitarian perspective, but also because of Donald Trump. Yep, he'll be long out of office, but his spirit will remain. And their hate for his spirit will remain. And it will haunt the new administration. Here's what I mean. After 4 straight years of condemning the orange man for every move he made and every word that came out of his mouth, there's not a chance in hell the new administration is going to let the housing market crash on their watch, especially in the first year of Biden's presidency. If it did, it would mean almost certain death for Democrats in the next election. And we all witnessed to what lengths they went to win this most recent election. Now, whether you agree with me on that or not, it doesn't matter. I know at least 50% of you will disagree, and that's okay, but it's irrelevant. Congress is going to take every opportunity to stimulate our way through this. And we have a cooperative Federal Reserve System that is engaged in loose monetary policies that is more than willing to comply. Again, you may have a different opinion on that, but here's what you can't disagree with. And it's the second reason why delinquent mortgages and property taxes won't bring the housing market down. Housing prices are at an all-time high and still appreciating. People have equity, and their equity is growing, even for the property owners that are delinquent on their mortgage and property taxes. And when you have equity, you have options. Despite all of the chaos, this isn't 2008. It's not a make or break situation for homeowners. Homeowners have options. There's loan restructuring. There's loan refinancing. Hey, with all of that equity, you could just sell the house. Foreclosure is not the only option for someone today that's delinquent on their mortgage or their property taxes. I get it, things are bad, and bad for a lot of people. That's not lost on me. What I'm saying is, for property owners at least, it could be worse, a lot worse. If you own property, it could be one of the most safest positions to be in society right now. Between pent-up buyer demand and investor demand, the historically low price of other people's money, there's enough money in the system to not only sell your house, but to get top dollar for it. And when you combine that along with government intervention, the housing market, it ain't crashing in 2021.
Another factor in all of this that people aren't even considering when it comes to this housing crisis that's looming in the distance is the fact that a lot of people live in manufactured homes. Much of my channel is dedicated to affordable housing options. And one thing most people do not understand is that If you own a manufactured home and you happen to live in a manufactured home park, you rent the land that's underneath it. In most cases, you do. And with the mortgage moratorium that had come about, where you could restructure your mortgage and have those deferred payments, guess what? Those payments were not deferred for people that had rented land because it's not attached to the land. They have a different type of home loan, which is called a chattel loan. So those people were not able to put their payments at the end of their mortgage, which most people that live in manufactured homes are looking for the most affordable option. These are the people that are going to be in the most crisis and most likely lose their homes. Who wins in that situation? Generally, this happens to be the people that have the most low income type of jobs that are not able to work right now. And a lot of them have lost their job. Why are we not talking about this? What I think is happening and why these economists have kind of just ignored this whole fact is because of the fact that they know for a fact that investors are going to come through and they're going to go ahead and purchase these. People love to invest in manufactured homes in manufactured home parks. It's one of the best ways for an investor to make easy money.
Now, I don't know much about the manufactured housing market, so I'm going to take Kristina's word for everything that she said. I mean, she's the expert. There are 17.5 million manufactured homes in the US, of which represents 6% of the housing stock. Much bigger than I thought, but still, not in my opinion, big enough to impact the overall housing market. And she mentioned investors are essentially in line to buy these manufactured homes if they go up for sale. And she's right when she said economists haven't really brought this up because the fact that those investors are there waiting to buy. And that type of demand prevents a housing crash from happening in 2021. This may actually even be good for the economy. Now she brought up unemployment, and this stat she referenced, 10.7 million people are without jobs. And this is double the number in February. That's a lot of people that aren't working right now. Let's look at where we are historically though, and how this correlates to the housing market. The unemployment report for November 2020 was 6.7%. The last time we were at 6.7% as a nation was in March of 2014. We were in the middle of Obama's second term, and the GDP was growing, and the Case-Shiller National House Price Index was in the midst of a steep incline. So as sad as it is for the people that are unemployed, history shows that the economy and the housing market don't suffer at this level of unemployment.
Another aspect of housing for 2021, even though it may look rosy on paper, it doesn't really look good for the people that are buying their first home. The average American makes about $68,000 a year. If you add their average debts of about $1,000, you get a house for about $117,000. That's what the bank would approve you for. The problem lies in the fact that the average house in the United States costs $295,300. I know in my area you couldn't even find a house for $117,000. It would be very difficult to find. Throughout the United States, it's the same story. And in major cities, you're not going to find anything for $117,000. So what is a new home buyer supposed to do in 2021? Well, supposedly the president-elect that he will be putting into place for first-time home buyers. It will work much like the ones that we had seen in the past in 2007, 2008, that it enticed home buyers to go ahead and purchase their first home. So with that, I do believe that 2021 is going to be even more increasingly hard for a first-time home buyer to buy a house. Not only they're not going to have enough money for a first-time home, secondly of all, the supply is getting a little bit squeezed.
Again, as sad as this is for new home buyers, it doesn't spell big trouble for the housing market in 2021. I mean, it may be big trouble for the new home buyer, but not the housing market.
And there you have it. We still have prices that are going to be too high for many first-time home buyers. Taxes are going to be due for many people that took the forbearance. And it doesn't look like there's going to be any reprieve for people that live in manufactured homes that rent the space. So now that you know all this, do you still think that we're going to be smooth sailing in 2021 as far as the housing market?
Smooth sailing? I'm not going to predict that. I mean, there was nothing smooth about 2020, and we're not out of the woods yet. What Kristina shared may all be true warning signs for big trouble in the housing market. But in 2021, I don't know. What do you think? I know I'm going to stick with my forecast and say no. Don't get me wrong though. I do think the housing market actually the economy as a whole, is built on a house of cards. And we're going to see a significant market adjustment at some point. It's just not going to be in 2021. But wait, there's always this wild card. And that's not from the National Enquirer either. That's straight from the coronavirus bill signed in December 2020. The housing market is not going to crash in 2021, but I didn't say it wouldn't get a little bit weird. So based on what you heard, what do you think the market is going to do in 2021? Share with me in the comments below. And who do you know that may also find this useful? When their name comes to mind, please share with them. And don't forget to head over to Kristina's channel and hit the subscribe button. Link below in the description. That's it for now. Thanks for watching. I'll see you next time.